Hi everyone, I hope this message finds you enjoying your summer and living another wonderful year. I'm David Harris with Statera Wealth, and I wanted to take just a few minutes to share something that has been on my mind as we look at where we're at today in our current environment. Something very important to think about. For the last 16 years, we have enjoyed one of the strongest bull markets ever in history, with just a few exceptions. And while that has been a great blessing for most investors and they have benefited from that, it does create something, and it causes certain things to happen when you have long terms of bull markets. Your fiscal house changes. The fiscal house is what we use, and many of you know this, to position the money. The roof represents the growth component of your plan, or the part that's designed to grow, to outpace inflation. During bull markets, your roof can outpace your walls. The walls represent what your income is going to look like. It's the biggest part of your income plan. And it can outgrow your foundation, which is the security part of your plan, the part that gives us the security that we know we can't lose that money. So the proportion of those three things becomes very imbalanced, and we simply call this portfolio drift. Your roof, the more aggressive and volatile portion of your house, keeps growing, while your walls and your foundation either stay the same, or in some cases they even shrink. A lot of that just depends upon how your fiscal house was designed and how it was built for your situation. Portfolio drift doesn't mean that someone made a mistake or something went wrong. It actually is just the opposite. It means that your investments did exactly what they were intended to do, and that's grow. So here is the question. Does your fiscal house today still reflect the amount of risk that you're willing to take today? Not the amount of risk that you were willing to take last year or 5 years ago or even 10 years ago, but today. It has been 16 years of goodness, or 16 years older. Things have changed. Is your house in balance, or is it out of balance? One of the reasons we ask this question today especially is because we also pay attention to long-term market valuations. The Shiller-Cape ratio, or they call it the Shiller PE or the Cape ratio, is one tool that helps us understand whether markets are historically expensive or inexpensive. So just to bring reference, the current ratio is at 40. The median ratio for the entire history of this measurement is at 17.7. So today, it indicates that markets are very expensive. But what does that mean? It doesn't mean that the market's going to immediately decline. It doesn't mean that people need to run for the hills or anything like that. It just tells us that stocks are expensive and that we've had this wonderful growth for 16 years. As a financial advisor, we look at this from a macro perspective and say, what does it tell us almost every time? It tells us that we need to review and look at our house to make sure that we are protecting the money that we have grown. So protection deserves as much attention in portfolio growth or in your fiscal house as does the attention to creating additional growth. I'm often reminded of Warren Buffett's quote in regard to his two main rules of investing. He has three, but I'm just going to talk about the first two. The first one says, never lose money. The second one says, never forget rule number one. So one way we often restore balance is simply by taking a portion of the gains that the roof has produced and use those gains to bolster your future income. Maybe we set aside money for next year, 2 years, 3 years down the road. Or we can strengthen your foundation by placing securities in things that are placing assets in guaranteed strategies or strategies that you can't lose. That's the whole point, is that the foundation is money that you cannot lose regardless of the environment. Sometimes we use strategies that create constant and guaranteed income. And sometimes we use a combination of both. Everybody's house is different and everybody's solution is unique. But the biggest difference here is that the goal is the same, is that we create a balanced fiscal house. A balanced fiscal house doesn't mean that you're going to earn the highest returns year over year. What it does mean, though, is it brings confidence and peace of mind that no matter what markets are doing, no matter what interest rates are at, the plan still works. We're trying to make sure that you never outlast your money. So if you've looked at your fiscal house today and thought, my roof may have gotten a little too big, I'd invite you to take the next step. Together, we can evaluate your fiscal house, determine whether your portfolio drift has occurred, and discuss whether restoring balance makes sense for where you're at today in the current environment. That may mean strengthening your foundation or creating more reliable income, reducing unnecessary risk, or all of the above. It may also mean that simply everything's good and that we should leave the fiscal house exactly where it should be, as it is. So every fiscal house is different, and the right solution should always fit your goals. This is very important. Your timeline, and the comfort you have with risk. Because the purpose of the financial plan in the fiscal house isn't simply to build wealth. Definitely one of the pieces for sure, but it's more to create freedom and confidence to enjoy the life you've worked so hard to build. So as we look at this, if you're already a part of Statera, and most of you are that will be receiving this, we'll be reaching out to you soon to schedule your late summer and fall reviews. If you'd like to meet sooner, simply give our office a call, and we'll be happy to get you on the calendar. If you're new to Statera, we'd love the opportunity to introduce you to the fiscal house, whether you're looking for a second opinion or you're building your retirement strategy for the first time. We'll help you design a fiscal house that's built around your goals and the things that are most important to you, not just stock markets. So give us a call, 435-673-6350, and we would love to help. May God bless.